Hello again, fellow BeachBum traders. Thank you for joining us today for our due diligence video on Seagate Technology Holdings, ticker symbol STX, where we'll try to answer the question, is STX a good stock to buy now? So we'll do our standard initial due diligence, do our analysis of the company, the stock, and draw our conclusions, our opinions as to, is STX a good stock to buy now? So stick around till the end of the video. Again, we'll go through all of our standard due diligence, and then we'll draw our conclusions towards the end of the video as to, in our humble opinion, is STX a good stock to buy now? Okay, let's take a tour of the home page for Seagate Technology Holdings, ticker symbol STX, and I will leave a direct link to the homepage for Seagate in the description box below, so you can explore it in further detail at your leisure. But again, we can see, various products that they have: cloud data center, specialized drives, personal storage. So again, a lot of cloud edge data storage, etc., software, hardware, specialized drives, gaming drives, Xbox, so they're drives for all the major gaming platforms, and then personalized storage, so for individuals. Other solutions, so they've got by use case, backup and recovery, data transfer, edge, private cloud, public cloud, storage as a service, cloud backup, partnership with Zoom, multi-cloud, video analytics, data migration. So they cover different multi-cloud, private clouds. They've got partnerships with Cohesity, IBM, Intel, etc. So all your major Red Hat, all your major cloud vendors, your hyperscalers, and then by industry. So nice breakdown. So various innovations, magnetic recording, risk architecture, startups and innovators. So they've got a startup and innovation lab, security, open source development, and infrastructure. So again, you can explore all this in further detail. You can see they're highlighting their live cloud, their multi-cloud capabilities, cost-effective object storage designed for multi-cloud. We live in a data economy. That's I agree, and I think the potential future is very positive. Their focus on that is very positive. Reduce the cost and complexity of your storage infrastructure. And again, towards the end of this video, I'll give you some of the history I have with Seagate that goes back quite a long time, and also more recent experience with this type of data storage for cloud, hyperscaler, multi-cloud, etc., private cloud, and where I see the future of data storage in general going forward. So again, we can see they're focused on multi-cloud strategy, which I think is a good idea. Backup restore, which is good. Storage workflow, store more for less. So yeah, the cost of storage, dramatically drops over time, and essentially, it's a commodity. So again, they're focused on this multi-cloud, mobile, edge storage. Again, good theme going forward. Managed migration, again, another important thing. Democratizing hyperscale storage architecture. Increased density, intelligent object storage. See, they've been around for 40 years, 10 billion in revenue, 40,000 employees. So yeah, they've been around quite a while. Again, I've got a long history with Seagate products. So mass data storage, HDDs, dominate the hyperscale cloud architecture. Data-driven enterprise, again, another good theme. And then it looks like they have a decent social media presence. So again, you can leave the direct link to Seagate's homepage in the description box below. You can explore this in more detail at your leisure. And again, we'll talk more about several of these themes at the end once we've done our due diligence on their company and their stock. Okay, let's do our due diligence on Seagate Technology Holdings, ticker symbol STX in ChartMill, and I'll leave this direct link to the profile for Seagate Technology, ticker symbol STX, in the description box below. We can see as of October 27th, 2022, their technical analysis rating is 0, setup is 1.5 out of 5, so very poor technical setup right now. Their fundamental overall rating is 3 out of 5, so a little above average. Valuation 3 out of 5. Profitability 4.5 out of 5, so very positive. Growth about 3.5 out of 5. Health only 1.5, and a dividend 4 out of 5. We can see in the chart, again, as of October 26th, the close of market on that day, we see it had bounced off this descending trend line, had been trending up, and then we see a brief gap down, and we'll see that that was because they announced poor earnings and a reduction in workforce, etc. We can see it's trading below its moving averages. It's been in a downward trending channel, was making a rebound and then gapped down. So again, we'll look at the details of that as we go forward. So we can see they just reported earnings on the 26th. The next earnings is in January the 24th. Market cap of 11 billion. Small institutional ownership. Well, 85% institutional ownership. PE is very low, 6.54. Forward PE is 12.2. Their dividend yield is positive 5.03. So again, they have a very positive dividend, beating the current bond rates, the current interest rates. See their profile. They develop, produce, distribution of data storage products, electronic data storage solutions. They're headquartered in Dublin, Ireland. Have about 40,000 people. They IPO'd in 2002. Hard disk drives, HDDs, data storage products, solid state drives, SSDs, solid state hybrid drives, SSHDs, storage subsystems, edge to cloud mass data platform, data transfer, storage as a service cloud, designed for mass capacity storage, hyperscale data centers, public clouds, serial advanced technology attachment, SCSI, and non-volatile memory express-based designs to support a variety of mass capacity and legacy applications. Let's look at their stock chart in more detail in ChartMill. So on a daily basis, again, we can see it has been downtrending. It's in a downward trending channel. It's been kind of adhering to those trend lines, bouncing off the bottom trend line, getting rejected from the upper trend line. It briefly, recently broke below its near-term moving average. Again, bounced off that bottom trend line, was headed back up, and then gapped down very recently. Again, just as they just reported poor earnings, reduction in workforce, etc. So if we look at the weekly, again, we see it's been in decline. It kind of peaked out in end of 2021, early 2022, and then broke down from there. So we see it's got pretty good support in the 50-ish area, low 50s. It's got a high in the 115, so a pretty nice 2-to-1 risk to reward ratio. Again, we see it bottom turned up, but it's running below its moving averages. So if we zoom out again to the monthly a little bit, and we see that big run up from late 20 into 21, maxed out in late 21, early 22, and since been declining. So again, we see this long-term, slowly uptrending trend line seems to be providing a good support. See, currently also that moving average has in the past provided support, but it recently broke down through that. And so one could expect it may test that lower trend line again in the long term. Okay, if we look at the technical analysis data for Seagate Technology, ticker symbol STX in ChartMill, we can see currently as of October 27th, it's showing a technical rating of 0, so its performance in the market's below average. It's not positive. Medium and short-term picture give negative signs. We can see both the weekly and the daily charts. It's been downtrending. We see that bouncing off that bottom channel trend line. So we see its range is 49 to 58. So that's wide. It's been consolidating, has average volume of 2.6 million per day, so pretty good volume. See, the current setup analysis is only 3 out of 10, so pretty bad. Doesn't present a quality setup at this moment. A little bit too volatile to find a nice entry or exit. Good idea to wait for consolidation. So we say the volume's been higher in the past couple days. Short-term trend is neutral. It's a bad performer in the overall market. 81% are doing better. It's in the technology, hardware, storage, and peripheral industry. It looks like it's underperforming in that industry, and it's trading near the lower end of its 52-week average or range. We see all the trends have been negative, except for the very recent short-term trend is neutral. Again, we see the short-term trend's neutral. Very short-term was positive, but the longer-term trends are all negative. See, its average true range is 2.65. Volume 2.66 million to 4.74. Recently it was over 10 million, so very recent it had high volume. If we look at the fundamental analysis data for Seagate Technology Holdings, ticker symbol STX in ChartMill, we can see as of October 27, 2022, it's got a fundamental rating of 6. So it's in the technology, hardware, storage, and peripheral industry, has a great profitability rating, but doesn't score well on financial health evaluation. Not priced too expensively while it's growing strongly. So they say keep an eye on this one. So it's very profitable, 9 out of 10, has a above average dividend, health is pretty poor, valuation is a little above average, and growth is above average. So again, profitability, 9 out of 10, is very profitable, very positive. So return on assets is good, return on equity is good, profit margin is good, 14%, Petrovsky score is good. It's outperforming the industry. So again, in terms of profitability, it's all very positive. Valuation, 6 out of 10. Price to earnings, PE ratio is only 6.5, so pretty cheap. Compared to the industry, it's valued cheaply. PEG ratio is good, so again, cheap. Forward is 12, so it's not cheap going forward. Enterprise value to EBITDA is pretty neutral, valued in line. Price to book is expensive, and it's valued more expensive than its industry peers. So its price to earnings is good, book is bad. So growth, it's very positive, 7 out of 10, strong growth in EPS, 43%, so that's very positive. It's been growing by 14% yearly. For the next 5 years, it's estimated to get positive growth, 20%. So again, it's good growth. Revenues has been growing slightly in the past year. Revenue has been growing. Okay, so revenue growth recently hasn't been that great. So we see the EPS has been growing nicely, particularly the past year was very positive. Revenue growth is a little slow. And then we see going forward, it's expected to turn down for a couple years. And then it looks like the EPS will recover in years three through 5. Same thing with revenue. We see a near-term decline. So again, negative for a couple years and then a recovery later on. So again, we see this revenue kind of peaked in 22 and then it's dropping off in 23 and then recovery over time. Same thing with EPS. It's peaking in 22 and then dropping off in 23 and then recovering and eventually surpassing its previous EPS. So health is only 3 out of 5. It's got a good Petrovsky score. The quick ratio is not good, bad, not financially healthy enough, could expect problems. Quick ratio, same thing, issues with paying short-term obligations, has a bad debt-to-equity ratio, and its Altman Z is low, so again, issues with their debt, possible risk of bankruptcy, and it's worse in terms of paying its short-term obligations in the industry. So again, health, it's underperforming. Its Altman Z is positive but low. Pays a high dividend. Now, since we just looked at the health and some issues with paying short-term obligations, let me throw in right now that may bode for a possible dividend cut. If they have issues with paying their short-term debts, they may have to cut their dividend, reduce their dividend. So again, something to consider when counting on that dividend is due to their financial health. They may have to cut that dividend, but right now they're paying 5%, which is over current bond yields, over the current interest rates, but not up to beating inflation at this point in time. It's got a good dividend yield, pays better dividend, better than industry average, pays out 37% of its income, so they're saying this is sustainable. So paid for 10 years, so again, they seem to be very committed to their dividends, so maybe, they will find other ways to reduce their debt, be able to cover their short-term obligations and not cut the dividend because they do seem quite committed to it. Dividends been growing while earnings have been declining. So here, they're saying that growth, the dividend growth, is probably most likely not sustainable. So it looks like the dividend has been increasing, but again, it looks like it's going to drop off a bit in 2022. So we see it peaked in 19. Their income, free cash flow started to decline. Dividend's been pretty stable. Again, they seem pretty committed to that dividend. So payout is 37%, retained earnings 63%. Again, we see their PE currently is pretty cheap. Dividend yield 5%. Their last ex-dividend date was September 20th. So if we look at the analyst ratings in ChartMill for Seagate Technology Holdings, we see currently it's got a 71% by consensus, set a mean target at 76.86, so it's got almost 44% upside. It's got 32 analysts, so it's got good coverage. Again, we see the median price target $75.99, so 42% upside. Means just 76.86, so 44% upside. The high is 105, so almost 100% upside. So the analyst risk reward profile is pretty positive. The low is 40. hasn't changed much. It's again got good coverage. We see as of 1024, maintain neutral, 1017 hold, equal weight, so very, very neutral, not changing a whole lot. So again, right now we see there's 5 strong buys, 8 buys, 18 holds, and 1 sell. So again, we see that most of the sells had dropped off. They picked up a couple sells, mostly holds, a lot of buys. So it's improved recently. Look at the ownership structure for Seagate Technology Holdings, ticker symbol STX and ChartMill. We could see it's got about 84, 85% institutional, only 15% public, and a very small percentage of insider. So institutional is 84.61%. We've seen a positive insider change recently, positive institutional change. See the shares outstanding, 206 million, float 205 million, so pretty much the same. So again, institutional ownership looks pretty stable. Had a couple insider sells back in February and November, nothing recently. Okay, if we do our due diligence on Seagate Technology Holdings, ticker symbol STX, and the online browser version of Webull, I'm on the stock screen in the online browser version of Webull. We can see here's the 1-year chart. So we can see, it's been declining generally. Recently kind of bounced up, got rejected off this pivot point. And we see the bottoms, in the 49 area, 49.62 or so. It's got an upside up in the 114, 110, 114. So pretty nice upside. See their last dividend was 70 cents on September 20th. Looks like they pay a quarterly dividend. Looks like it's 70 cents, so it's been pretty consistent. They just reported earnings that we'll see. So if we zoom out to a little bit longer term, let's see where it's sitting at that. It bounced off that bottom there. Again, it's got upside up to a 114 or so, and downside maybe down to 30. So 20 downside, 50 some 60 upside. So a good 2-to-1 risk reward ratio profile. So that's positive. So if we open the lower pane and look at some recent news, here's an issue that was recently reported. They're under investigation for potentially violating U.S. export rules for selling hard drives to Huawei, Chinese company that's essentially been sanctioned. Also, they just reported earnings, so revenue decline in Q1, missing consensus to X 3,000 jobs, so workforce reduction. They missed their estimates, so that explains the gap down as well as this potential export violation. So again, a lot of negative sentiment, a lot of recent negative catalysts, and therefore the gap down. So if we look at their financials, income's been declining. It's estimated to continue to decline. Balance sheet, again, declining and below estimates, so that's negative. Cash flow, again, missed estimates and negative. Financial ratios, or return on equity has been above estimate and positive, so that's at least positive. Income statement, again, declining. This, net income is negative, it's declining. So again, that explains the declining stock price over, this past year or so. Revenues declining. Operating income declining. Balance sheet, their total liabilities went up, and now it looks like they're relatively stable, but their total assets have declined some, so that debt to asset line has increased, so that's negative as well. Cash flow, operating cash flow bottomed in Q1. Looks like it's somewhat improving, but the year-on-year line is declining. Significant losses from investment and downtrending. And their financing again is very negative, negative 1.9 billion. So pretty negative. The analyst consensus in Webull says hold based on 27 analysts. You got 11% strong buys, 18.5% buy, 66%, so 2/3 is say hold, small percent 4% say underperform. The current price is 53.39. The average price target is 64.95. The high is 88, so the analysts are not as bullish on their price targets, and the low is 40. So we can see their dividends been pretty steady at 7 cents, paid quarterly. Last ex-dividend date was September 20th. It is optionable, so you could write covered calls against a holding, a long-term position. So if you're looking to swing this in the long term or as a long-term investment, you can write covered calls, generate your own additional dividend. And again, you can see the profile in this lower pane in Webull. Just a quick reminder that as of the recording of this video on August 16th, Webull is currently offering up to 12 free stocks if you open and fund a new account in Webull. This is the most number of free stocks I've seen Webull offer. I don't know how long this offer will last, but if you're not already using Webull, here's an opportunity to get 12 free stocks. You can find our affiliate link to Webull in the description box below, on the About page on our YouTube channel, in the link section. Okay, let's do our due diligence on Seagate Technology Holdings PLC and FinViz, and I'll leave the direct link to the profile for Seagate Technology Holdings, ticker symbol STX, in FinViz in the description box below. We can see they're categorized as technology, computer hardware, and they're based in Ireland. We can see they're trading on the NASDAQ. If we look at their current chart, we can see on a daily chart it's been downtrending. It's in a broadening channel. Currently broke out of its shorter term moving average. It looks like it bounced off the lower trend line of that channel, broke above its 50-day moving average, still below its 200-day moving average. If we zoom out to a weekly chart, again, we see that bottom, turn back up, bounce back up. We see again it's well below its moving average. It looks like it's been downtrending since the beginning of 2022. This is as of October 25th, 2022. So it looks like it ran up through 2021, bounced off its moving average, hit a high of about 117 or so, and has been downtrending all through 22, and looks like it bottomed and bounced in October of 22. So I can zoom out to the monthly and see a longer term. So again, we see this 40-ish, 45-ish area is a pivot support level longer term. Bottom, if we go way back, it's a bottom in the 9s, but we can see a near term bottom in the 18s, and it was pretty flat for quite a period of time, and then has since run up over the past couple years. So again, we see it only recently broke down below those moving averages, and we see more of a monthly type doji type candle, but we saw in the shorter term that it did look like it bottomed and bounced. So market cap about 11 billion. Income is positive at 1.65 billion on 11.7 billion of sales. Cash per share about 312. Does pay a dividend, 4.97% yield, so that's pretty attractive. In par with the Fed interest rates currently and expected in the near term. It's optionable. Shares outstanding about 214 million. Not a whole lot of difference between outstanding and float. Target price of 73. Currently, it's sitting about 56.31. So the 52-week range is about 49.62 to about 117.67. So we could see, a reasonable amount of upside potential with some, downside support in the 40-ish range, and then again 20-ish range. So does have very high debt, so that's a bit of a concern. Does have a positive PE of about 7.7, so that's not too high. So, but that debt is concerning. We'll need to dig into that in more detail. Look at some of the recent news. So it's a dividend payer that pays over 5%, so that's a positive for Seagate. We've got recent earnings. Earnings coming up. Let's see if they give us the date, 26 before market opens. So this is right before their earnings. So we'll have to see what happens with their earnings. That obviously could have a positive or negative impact. Otherwise, back in September, Warren's disk drive demand continues to erode. So that bodes poorly for their upcoming earnings. Earnings and revenue missed estimates in July, and it looks like it dropped significantly there. So it looks like they missed some earnings estimates recently, and that might be attributable to the recent decline. We look at their profile. Seagate Technology Holdings PLC provides data storage technology in Singapore, US, Netherlands, and internationally. Provides mass capacity storage products, including enterprise nearline hard disk drives, HDDs, enterprise nearline solid state drives, SSDs, enterprise nearline systems, video and image HDDs, network attached storage drives. Also offers legacy applications, mission critical HDDs and SSDs, external storage solutions, Seagate UltraTouch, OneTouch, and expansion product lines. LCLE and Maxtor brand names, desktop drives, notebook drives, DVRs, HDDs, gaming SSDs. Also provides a live edge-to-cloud mass capacity platform and sells primarily to OEMs, distributors, retailers. Was founded in 1978 and it's based in Dublin, Ireland. And at the end of this video, I'll kind of give you some history of my experience with Seagate going back to my earliest PCs. So if we look at their revenue, their financials here in FinViz, see their annual revenue looks like it is pretty increase and then steady, cost increase and then steady, gross profit increase and then pretty steady. EPS is positive. It's nicely positive and increasing, except a little bit of a decrease recently. Share count's not changing much. So quarterly, their last quarter was July, and we saw they missed estimates, so that was a negative. But their revenue has been, so it's been decreasing this year. So again, that explains the decline in share price for this year. Cost, though, is coming down, so that's a positive. EPS, again, has been dropping this year. So again, this year they've been losing some revenue, losing EPS, although their costs are also declining. So that's pretty positive. Their gross profit did decline. So again, all of those seem to be attributing to the decline in share price. Okay, let's do our due diligence on Seagate Technology Holdings PLC, ticker symbol STX in Seeking Alpha, and I will leave the link to their profile in Seeking Alpha in the description box below. So if we scroll down and see their chart, we can see it's been pretty much in decline throughout 21 into 22. We can see a 52-week range of about 49.67 to 117.67. EPS is positive at 460. PE is about 12. Dividend is $2.80 for a yield of about 5%, so not too bad. Short interest is 6%, so again, not real high. Market cap of $11 billion and volume of almost 3 million. So if we look at some of the recent articles and news, it says its eroding business cycle makes Seagate a stock to avoid. So that was recent as of October 12th. Outperforming Western Digital on major fronts. Seagate shares fall as benchmark cuts estimates and storage concerns grow. Western Digital rises even as benchmark cuts estimates over NAND. Demand headwinds ahead, moving to sidelines, lots of upside from here. So again, you get contradictory information, although these were a quarter apart. Follows rival Western Digital South, hits 52-week low back in the middle of September. Downgraded by Deutsche Bank, uncertain recovery. And then we get into some older articles. So if we look at their ratings and grades, we see right now Seeking Alpha authors say buy, Wall Street says buy, quants say buy. Valuations of B, so pretty good. Growth B minus, and profitability A plus, so obviously very profitable. So if we look at their revenue trajectory for since 2018, looks relatively stable, pretty flat. Looks like it peaked in July 22. Dipping July 23 and then recovering in June of 24, but again, not expected to match 22. So if we look at the quarterly, again, relatively flat, then went into somewhat of a decline. Quarter 3 of 22 looks like it's continuing to decline, and it looks like it's continuing to decline into quarter 2 of 23. So, outlook is not real positive there. Earnings per share quarterly, again, peaked in quarter 2 of 22. Looks like it's declining, expected to continue to decline. Looks like their earnings are expected to rebound somewhat in quarter 2 of 23. So again, more expected decline going forward until sometime in 23. If we look annually, again, peaked in June of 22, drops way off in June of 23, and then rebounding in 24, but again, not to the levels of 22. So we can kind of see peaks, drops, and then recovery going forward into 24. So again, we see more of a recovery. 23 is expected to be negative, 24 is going to be positive, and 25 continued growth. So again, this looks like a longer term turnaround swing type play based on the commoditization of their products. So we see a lot of down revisions recently. P's 12, so it's not super low, but also not super high. Price to book 108. Revenue growth is 9%, so decent. Gross profit margin is almost 30%, so not bad. Good return on equity, decent return on assets. Momentum's all negative. Recently, market cap $11.6 billion, total debt about $5.7 billion, $650 in cash, 16.7 billion enterprise value. So their dividend yield's about 5%, so that's pretty good. Payout ratio is only 34%, so again, not excessive. Been growing for 3 years. Recent dividend was 70 cents. Their latest ex-dividend date was September 20th, and the payout on October 5th, paid quarterly. So average volume is about 2.3 million, recent almost 3 million. Shares outstanding 208 million. So we see they have positive dividend growth. So, it's pretty good. They pay a decent dividend as they're beating the current Fed interest rates. So current bond yields So again, this is one that would not suffer from alternative investments, and it looks like an attractive dividend stock. Again, price appreciation wise, we're seeing they're in a down cycle with a turnaround in 24-25. We see ownership, high institution ownership, almost 80%, 13% public, and another 6%, 6.5% hedge fund managers. So again, a lot of stability, a lot of institutional ownership. Their main competitors, Western Digital, they show a couple others, but that's probably their primary competitor. So you can watch Western Digital for uh, insight into the market. If Western Digital gets hit, then Seagate might follow, or positive catalyst going the other way. Again, not a high short interest, only 6%. So only 5 days to cover. Beta 1.24, so it's going to move a little bit faster than its index. And Altman Z-score of 6. So even though we did see it had significant debt, it doesn't look like there's any risk of insolvency here. So that's a positive. Revenue $11.7 billion. Gross profit $3.5 billion. EBITDA $2.4 billion. EPS diluted 7.4, so all very positive. Total cash $615 million. Debt to equity is very high, so they got $5.7 billion in debt. So again, that is a bit of a concern, but their Altman Z was nicely positive, so it doesn't look like it's a major issue. Looks like the majority of their debt is long-term debt. Free cash flow is $580, so that's positive. Cash from investing, so they lost a significant amount of money investing. They make 1.7 from operations, and positive free cash flow. So all those are positive. Before we share our conclusions, draw our conclusions as to is STX a good stock to buy now based on all of our due diligence in this video, I just wanted to share with you some of my personal experience with Seagate Technology Holdings. I have a long history of using their products. I believe it was the first hard drive that I ever bought the first computer I ever bought for myself, a Tower PC 386 back in the early 90s. And again, at that time, Seagate and Western Digital were the top recommended hard drives and tape drives, etc., data storage solutions at that time. And they're the primary survivors of that industry. So again, Seagate's been around for a long time. High quality products. Again, I believe I had Seagate and Western Digital data storage products in all my tower computers for several decades. So again, I've got a long history of their products. Their products were always pretty good quality, and again, their primary competitor nowadays, the ones that survived, were Seagate and Western Digital, and so they're going to tend to move based on each other's news, earnings, etc. So keep an eye also on Western Digital if you're looking at Seagate, and vice versa. So again, I've got positive historical experience with Seagate. Now just looking at their future, I like their direction in cloud data storage, focusing on data center, etc. So I think their direction and shifting from a consumer PC type hard drive market and focusing on cloud, private cloud, etc. Also, I have experience in the defense industry where they have vaults and with large data storage. Also, I noticed they're doing some work with hyperscalers and Cohesity, and I know some defense contractors that are using those products as well. So again, I think their future direction is good, and we saw that kind of in the trajectory for their revenue and earnings. Is currently it's in kind of a decline for the next couple years, and then a recovery going forward, 3 to 5 years out. So again, the near-term outlook is not very positive. They just missed on their earnings. They're cutting workforce, etc. So there's a lot of negative sentiment. We also saw that they're being investigated for selling exporting to Huawei. Now, this is just my personal opinion, not financial advice or legal advice, etc. But typically in those types of export violations, they end up paying a large fine, and that's about it. And so we'll see. Well, those are again negative catalysts that could negatively impact the stock price in the near future. So that's something to watch out for. Again, we see their revenues declining, earnings declining, etc. in the near term. Another point I want to make about these types of products, hard drives, data storage, etc., are very much, in my humble opinion, like semiconductors or commodity. They go through a commodity cycle. So you have undersupply, prices go up, and then they overproduce. Companies then overorder, and then you go through a glut and prices decline. So you go through these, swings of up and down, cyclical, just like semiconductors and many other commodities. So in my humble opinion, all of those things are commodity based. Also consider that we're going in a recession, and therefore companies are going to be less likely to be spending large amounts of sums of money on additional expensive data storage. But eventually, as we start to come out of that recession, they're going to start to invest in the cloud. Is definitely the direction of the future, and we're going to have significantly higher data storage needs going forward. So again, I think the long-term future for Seagate is very positive, but the near term, I think the price may continue to decline. So we're going to put Seagate into our bullpen. The answer, in our opinion, is STX a good stock to buy now? Well, in our opinion, not right now. Again, a lot of negative sentiment, revenue declining, EPS declining, etc. I expect the price to downtrend, particularly with all the negative sentiment, negative catalysts, but eventually swing back up as they turn around, as the data storage market turns around, goes from glut to undersupply as we come out of a recession. So a longer term, I see a bright future for them. So again, if you want to hold them as a long-term investment, get a good price and hold them over a long time, maybe write covered calls against it, that is an option. We'll be watching it, for a bottom. Where does the price eventually bottom and start to swing back up? And then look at buying Seagate as a potential long-term swing recovery play. But again, we'll be watching for that bottom, watching for the conclusion of that export violation thing. Also the negative sentiment and the commodity data storage commodity cycle. So again, we'll be watching it as a bullpen type item, and look for the bottom, look for a swing back up. But short term, the outlook is not very positive. So hope that all helps. Again, let us know your opinion, any additional information that you're aware of with Seagate Technology Holdings. What do you think? What do you think of all this information? What do you think of Seagate Technology as a company, their products, etc.? Let us know in the comments below, in our free Discord, in our Facebook group, in our social media, etc. Let us know what you think. Is STX a good stock to buy now or not? Should it be avoided short term, long term, etc.? Let us know. We hope this all helps, and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow BeachBum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.